So, oh, we have more people coming in.
I got them.
Hello. Mark, can I give to you can you help me at meeting more people into the...
No problem. I got it. Yep.
So for those of you that don't know Edge is a community of people, a very diverse community in which we work towards social change and impactful change in our communities. We support these change makers, and we call them also entrepreneurs. And we are trying to explore together and co-create ways and strategies in which we can create together a more equitable and sustainable world. What we do is that we help founders or change makers grow their ideas and ventures and support the triple bottom line approach, which is the people, planet, and profit. But actually, we're now looking also into a fourth line approach, including cultures there and all the social changes that are happening around us. So it's a bit of another discussion. We offer mentorship. Mark here is one of our coaches and mentors at Edge. We have learning programs that are continuously transforming based on the needs of our members. And we have an inclusive community that is very embracing of new ideas. And we like to help and support each other. And we are about to open again our co-working space. And we also offer some funding through our programs. We connect also Sheridan students to opportunities to learn and work with the startups, and we collaborate with community partners to support impact entrepreneurs in the region. So these are our channels. You are going to be able to look at this video later. We're going to send you the link of the recording so you can look into the channels so you can stay in the loop with us and keep communicating with us. And with that, I would like to introduce our co-host today, and expert in our Mentor Monday is Mark Rodford. He has a lifetime of experience working with communities and their ventures in making social change. And well, it's my pleasure to see you today, Mark. I wanted to say more about you. The first thing is, oh, I'm sorry, you cannot see my video anymore, but there you go.
There we go.
I am glad to be back here. I hate to be like doing the slides. These shows is something that I prefer the one-on-one, like face-to-face thing. But yeah, working with Mark has been amazing. And right now, before we enter the session, we were talking about how interesting it will be to look into how community bonds have been transforming and addressing today's needs. And well, Mark, what can you tell us about it? What are community bonds? Let's start with that.
Community bonds are a funding vehicle that are on the spectrum somewhere between, donations and all the way over to, say, investing in the Toronto Stock Exchange. There's all kinds of different vehicles, and community bonds are kind of in the middle. They're a way for organizations to tap into their investment potential of their community and allow for them to invest in a project of, whatever description you might imagine. I'm actually sitting in a building right now that we funded through a community bond. It's 10 Carden, it's called, and it's a gathering space in Guelph. And I'll just put I'll put the link, I'll have a few links for you in the chats. I'll just put it down for everybody to look at. But it's this building, and actually it might be, am I allowed to share?
Yeah.
Excellent. Let me see if I can find this for you. Oops, no, let's not do that.
I'll look into that.
Thank you. Excellent. Is good. Can everybody see that?
Yeah, we're seeing it.
Excellent. So this is 10 Carden. It's a building that we built in Guelph, and we use community bonds to do it. And I'll just we'll take you on a little quick tour here. Sound too?
Yes.
Thank you.
We're not going to make the space inclusive. We're going to design it with you in mind. The core premise of sharing and shared space is this isn't my space. It's not even 10C's space.
No, this is your space.
Design physically, but design socially, like careful curation.
Almost 200 members were touching on all of the sustainable development goals, right? Which is pretty cool.
It provides hope and inspiration for small, emerging initiatives.
I don't know, I kind of just want to say really practical.
Useful, and I know that's not the most interesting word, but it matters. It really works.
You're always understanding that there's creative stuff being done on an ongoing basis. And that can't help but help motivate you, inspire you, maybe even inspire a bit of competition in you.
The fact that you bump into so many different people with different skill sets and backgrounds is part of what makes the space kind of pop and be unique.
So that was a building that we I'm a founding member of 10C, and it's been around for just over 10 years now. And one of our goals right from the beginning, because we started out in rental, much the same way as CSI in Toronto, if everybody's familiar with that organization, started out renting, and we realized that in order for us to secure our place and be more sustainable, we had to kind of be a little bit more in charge of our own destiny. Funding is precarious at times. It takes a lot of effort to get it. And we realized right from the beginning that we needed to get our own building. And in order to do that, we needed to venture into community bonds. There's a lot of good literature on this, and I'll put a couple links in as we go along. But basically what we did was we raised several $1 million to augment the construction of this building, which used to be an old furniture. It's a 4-story building. It used to be an old furniture store. It has been for 100 years. And of course, we had to do everything required to get it up to modern standards. We have different rooms for gatherings, community rooms. We have a community kitchen that's been built on the 4th floor. The long-term plan is to have a green roof with community garden on the roof and solar panels. And we did it through community bonds. We raised millions of dollars on a number of different platforms. So depending on the barrier to entry was small, you could invest as little as $1,000, which is kind of a lower, it would be nice if we could get lower, but there's an administration piece that is required when you do community bonds. And so we had to kind of do a cutoff at some point, up to $50,000 and more. And you got a little bit better interest rate, depending on what your investment level was. But we were able to guarantee the investment with the asset that we purchased. So we had Van City, which is a really great progressive banking outfit out of British Columbia, but they're expanding across the country. Van City underwrote the venture, and we were able to kind of look at the bonds as kind of a second mortgage, if you will. It's guaranteed by the building, the asset of the building. Of course, the asset has increased, so the value of our building is now way more than it was even when we first opened it, which is fantastic. But people were able to invest their $1,000 or $5,000 or $10,000 in us instead of, maybe putting in an Exxon or McDonald's or one of the things. People are looking at the community level to keep their money closer to the ground, and in a way, in an access place where they could see what it does, have a visceral attachment to the effect their money would have on their community directly, which is always fantastic. So we've just gone through our first cycle. We've opened up another round of investment, but the fascinating thing is, with the principal that we owe back at the end of the 5 years, which was the term, 70% of the people who invested rolled their investment again. So we didn't have to, I mean, you have to be ready for 100%, but even CSI, who's kind of the forerunner, Center for Social Innovation in Toronto, who has 2 buildings now, they're about 50% of rollover, people who believe are so satisfied with it, with the process, that they want to keep their money in the building, which we're noticing as well, to the effect of 70%, which is great. It's very exciting. There's in considering these kind of things, though, there's a number of things to look at. You have to pick a project that's meaningful for your community. It's obviously very important, because you also still have to sell it. The people are going to give their money over to you. You want to have a high level of confidence, or instill a high level of confidence in them, in order for them to give you your money and them to participate in the project. You want to be raising kind of a larger amount of money too. It's still a lot of work. There's some legal requirements and some stepwise procedures that you need to follow through on. So you don't want to necessarily have a bond raising where you're only going to raise $10,000 or $50,000. You probably want to be in the $500,000 to $5 million range, and have the project be something that people can identify with. The other piece is that whatever they're investing in, it has to have a revenue model that's sustainable, because you have to at some point pay people back. You're going to have to give them a level of interest. Ours ranges between about 2.5% and about 3.45%, which isn't huge, but it's like kind of in the GIC range. The people who are donating to you, if they're going to make 8 or 10% in the market, are also donating to you, realizing that part of what they're not making is part of what they're not making in that difference in percentage is their support for the project that you're putting in front of them. And then you have to tap your network of network of supporters. So it really is a local thing. So you need to have kind of all 4 of those things in place and at the ready if you're going to go forward with the project.
I'm going to mute now. So I'm curious now. We have 12 people on our Zoom meeting right now. I'm curious about knowing what brought you here. What are you have been able, like each one of you been in contact with this topic before? Are you if you want to communicate through the chat also about your specific questions about the topic, we'll be very happy to read them here for Mark. And I'm going to open. Otherwise, I do have a ton of questions too, so I can just follow up with my questions, and people can just hear from that. But if anybody has an experience, Mark.
Yeah, it would just be if everybody just jump in at any time. I always find these are way better when they're conversational instead of kind of me speaking from one vantage point. I've also had done 10 card, and I've also raised money in a food service project that I had in a community oriented restaurant that I opened, and we did a community bond approach where we had people give us $500. It was a more modest approach, $500, and we gave them $25 worth of food a month for 2 years at the restaurant. So we could raise some money to build it, and then we repaid them. And so basically they kind of got, so for food service, they got basically double their money at the end of the day. But for us, because food cost is smaller, like the investment is a different approach, but it worked out really, really effectively, and gave us money for the project as well.
Hi, Christine. Thank you for your question. Christine Brunston is asking a question here. She's mentioning our other coach, Lisa, from Edge. She was invited by her, and she's asking, do you have to be purchasing real property?
Not necessarily, although it does seem to be, the community bond does seem to be applied to property more often than not, because you can attach a revenue model to it. People are going to want to have a high degree of confidence that their money is going to be repaid. So this isn't a donation. If I'm going to put into, Christine, if I'm going to put $10,000 into your organization, then there's an expectation that at some point, number of years down the road, I'm going to get my $10,000 back plus a level of interest. That interest can get paid at the end. Some people do that at 10C. We pay every 6 months, just that little bit of interest, so it doesn't be roll over. And yes, 100% it can be a membership model. I think by hook, so we do have a membership program here as well that is separate from the community bond approach. This is like a direct legal investment, legal bond investment in the building and the organization. So we actually legally have it set up. So we have 10C as an organization, and we have another company that owns the building. So the two things are separate. So the people are investing in the one that owns the building that has the umbrella of everything else underneath it.
So for example, for members here that are putting together their ideas for making a venture a social enterprise, would this be a model to follow in terms of like a starting, or is this something like in which stage should someone start looking into this and learning more about community bonds?
Well, you can start looking at it at any stage for sure. I think for some organizations, they can be limited sometimes in terms of how far they can grow. You know, maybe because of their funding model, or you know, it can be scary too, right? As an organization, we want to make sure that we are being responsible to our organization so that the organization stays here next year. And so this was our way also of, because we have an asset now, we're so much more healthy as an organization. You know, the asset is getting stronger all the time, but we can also down the road leverage this asset if there was another asset to purchase, or if we wanted to run a separate program or ourselves invest in something else. We have lots of options because we own this building now.
I'm sorry, I went ahead and asked that before, and then Christine asked another question. She's asking, this doesn't affect the cap table then? I guess the membership model and the like following up from the last.
Doesn't affect the cap table. The capitalization table, like we can't. We're still not going over 100%, if that's what you mean.
Also, Christine, if you want to just jump in and chat, we will be very happy to have you here. If you're comfortable with the chat, that's okay. And anybody here who...
That'd be easier for me. What I'm saying is that the community bond, it doesn't participate in the shares of the company or venture. Is that correct?
That's correct, 100%. This is just a financial vehicle. So we're not giving out pieces of ownership. We're guaranteeing your money with our ownership, if that makes more sense.
Yeah, 100%. Thank you.
Okay, no worries. Yeah. So that's the other nice thing about it, is that we don't have, it's not like we have people who have bonds, but they don't have shares in the organization. So it's very, it doesn't affect management. We don't have to go through a communal decision process to make decisions. It's literally, people in the community have allowed us to use their revenue, use their monies in order to support us in this building, and we've guaranteed it with the building, right? So it's actually a reasonably safe, you know, there's no such thing as a 100% safe investment, but it's pretty solid for sure.
So Mark, who do community bonds work best for? Who will be the perfect candidate for looking into this?
I think like a great many not-for-profits could benefit from it. I've also been on the board of Wyndham House here. We provide housing for at-risk youth that are still trying to finish their high school equivalencies, but don't have a place to live. And we have three buildings that we own now. And it's all been through like this kind of asset procurement process as well. So that's a social service agency. 10C is a social change organization. So I think for a good many not-for-profits who oftentimes when they're renting, and then most of us, if we have any kind of facility for like an overhead requirement, like a literal overhead requirement, you're probably paying rent, right? Which is often a huge amount of money. So if there's a way that we can pay ourselves rent instead and find a way to do that in an effective manner, then we have, you know, the organization by default becomes a lot more stable because we have an asset and we're paying ourselves rent instead of paying a third party rent.
Right. And how about hybrid organizations? Those organizations that can have like some, you know, non-profit, but also some for-profit activities there. Like, would that be something to look into?
Yes, no problem. And you can have a number of people. So in 10C, for example, we have a bunch of offices that are rented out monthly. So I'm in a flexible office that I'm talking to you from now, but there's many offices in here that are dedicated to a particular individual or organization. Now, as it turns out, they all happen to be working in social change parts of, like, even their business. Some of them private businesses, but they're still in social change. And so we rent them out. And so we make up part of our revenue by renting out rooms to people, either monthly or sometimes hourly. We have an event space here. We have a classroom space here. We have a community kitchen here, and a lot of those get rented out by the hour, which is also fantastic. So the thing for any organization would be what would it be like for a not-for-profit to get a building that was a bit bigger than the requirements of their initial organization, and then open it up to the community, because everybody needs a place to stay.
So let's say, okay, if you have to, like, you know, put some steps in place for somebody who's trying to get into this, what will be the steps to follow?
Steps to follow. Well, it starts with a plan. It starts with an idea and a crew, right? And so, like I mentioned before, you know, is the project meaningful, not only for yourself, but is it meaningful for your community? Because you still have to go out and you know, sell, for lack of a better word, your idea to the people who you want to support you in your community. Now, your community might be, generally speaking, is probably geographically close. You could have some community members that are all over the world too, but you still have to have it make sense to whomever you're having the conversation with, that it's like, okay, this is a great idea. Obviously, you need to find a building if you're going to the building route. So, or what is the community bond for? The building is the easy example. It makes sense to a lot of people, and it allows you to build a revenue model that's sustainable, which is the other piece of the puzzle that's good. It is a lot of work, but at the end of the day, once you find, you know, once you procure your asset and get your financing in place, then, you know, you're kind of well in the races after that. You're moving along beautifully, right? I'm also going to put in the chat. Van City wrote it's a long read. Van City wrote a great article on. It's kind of a handbook. It's from a BC perspective, so some of the legal things are BC specific, but in terms of getting you thinking about what the kind of things are required and getting a better understanding of it, it's actually a very, very good white paper on community bonds in general. You can also look into put down communitybonds.ca. Is another good place to check things out, and that's from CSI in Toronto. They're kind of the leaders in social finance in the country, and have been the example that people kind of lead from. And then 10C is going to actually start helping people with this process as well. Julia Grady, who's our executive director, is pretty much an expert in it now, because she's lived through the whole experience in the past 5 or 6 years, and has put herself into a position now where she can actually consult to other organizations about how to go about doing this in an efficient and effective manner.
So in terms of building trust in the community you're trying to, you know, partner with to get a community bond in place, any suggestions in terms of how to go on with this, like how to start mentioning the topic in the community, how to start, like any resources you may have in order to inform the community in like simple words? Yeah. Maybe, you know, communities that are not as, you know, as informed or as approachable, maybe communities that have some challenges in terms of, you know, being communities that need this capacity building. Would that be possible?
Yes, I mean, I think from a not-for-profit perspective, we should always be working on our communities. And you know, sometimes we can't help that, but sometimes it also requires an effort. But from the community bond perspective, is you need to be building a business case. Oftentimes, you can build that business case with your community members, right? Because their questions will also inform your business case in terms of developing a strategy, developing a package around which people can jump on board, right? And so the first thing to do always, well, to have your idea. So, you know, the classic idea, like we want to buy a building. And then if you have your own organization, which you can always tap from, but your community members who have the voice, who have some input that you always can count on, you know, who are your advisors as it is? Who are the people who you know, enhance your viewpoints when you're having questions in general to start, you know, and then I would develop a working group, some sort of committee or a task force that would just work on this. It is a lot of work, but there's a huge benefit to it as well once you get rolling into it and realize that if your concept is good, and all the check marks are there for people, then it's a beautiful way to engage your community. Like we are literally sitting in a multi-million-dollar building that was built, that wouldn't have been built but for the participation of people in our community buying community bonds.
And can I ask some legal stuff about that?
Sure.
Specifically that building, for example, in terms of ownership, for example, of the building, who is the owner of the building? Is it the organization?
Yes.
The community has some, like, there's no like a co-ownership thing with the building. It's more like they are partners of the organization to these community bonds. Oh, I see.
Yeah. So it's just so 10C owns the building outright. But to Christine's point, they don't have the people who own the people who hold the community bonds don't have ownership in it. They just have a legal, it's like a lien. Like, you know, if a mechanic was to put a lien on your car or whatever the case may be, you could put a lien on the building. After whoever the Van City holds the primary mortgage on it. After if something fell apart and we had to sell the building, Van City would get their money first, and then the bondholders would get their money next. But we can't overfinance it, which would be illegal anyway. But you couldn't sell like 150% of the value of the building, right? We have to sell within the limits of what the building is appraised at. And as long as we're doing that, then we can, as long as the money makes sense that way, then we can issue the bonds accordingly.
Well, again, I want to make an invitation to our attendees to make their questions or to say their comments. You can use the chat, you can just jump in, you can just raise your hand in the Zoom meeting. But Mark, let's go into maybe the dark aspect of this. Like, what are the risks? It sounds too good. But what will be something to consider in terms of, you know, how risky it is, for example, how important it is to have that community trust, how important it is to have a reputation with the people you're, you know, doing business with. Like, what are also other risks, like maybe legal issues we should be considering, or other kinds of risks?
Well, there'll be some legal, you know, if you're going to raise millions of dollars, there'll probably be, you know, $50,000 worth of legal, but you want everybody to be happy. You want your organization to be safe and secure. You want your community bondholders to be safe and secure. So all that is a bit of an investment that also has to be paid for. But the dark side for this organization would be that the real estate market completely bottoms out and everybody hates 10C and leaves. And all of the people who are renting our space right now don't show up anymore and stop paying their bills. So it's you know, it is real estate in our case. So it makes for a very viable and safer investment for a lot of people. Now, where the return is not massive, you know, you're not going to be making 10 or 15% on it. It's going to be 2-3%, 4%. but for a lot of people, that's kind of what they were, if they had their money in a GIC at a bank, they'd be making kind of similar interest with that. So they'd rather give it to us and you know, watch a space come along.
And for example, in this case, a space and in having a space for rent, like space for rent during the pandemic, what happened? How did you how did these community bonds worked based on real estate during a time in which people were being at home?
Right. So that was we are participating in a lot of Tennessee as an organization is participating in a lot of community building that we do get grants for, which is great, because obviously we weren't renting a lot of rooms in the last 2 years. We were renting, you know, the office spaces were still there too, but we have a lot of people who will come in and, you know, you rent the activity room for 3 or 4 hours, or they need a place for a meeting, and so they'll rent one of our shared meeting spaces for a half a day. And so that all that revenue was, it was a bit precarious at times for sure, but fortunately we're also involved in a number of like we participate, we're part of a local food economy. We won a $10 million, City of Guelph won a $10 million circular food economy grant from the federal government, of which Tennessee participates in. So we have a lot of, we've gone from 2 co-founders 10 years ago to about 17 people on staff right now. So it's actually a burgeoning organization. They're doing really well, and people are knocking on our door a lot right now, and you know, and a lot of that is in part to the fact that we were able to get this building. You know, and it reinforces the fact that the security of the building allows for more momentum in the organization, because we don't have to worry about all of our money coming from like a funding organization, or, you know, and we still write grants obviously, but it's not, you know, it's not as precarious that if we don't get the grant, we're in deep trouble, which, you know, for a lot of the not-for-profits that I've participated in my life, that's always front of mind. You know, if we don't get that money from this organization or this foundation or this government agency, then we could be in deep trouble.
So in terms of assets, like we've been talking about like real estate, are there any other assets that can be used to build a community fund?
You could, the asset of a you know, business, like a not-for-profit, like a social enterprise itself, I suppose could too, but then you'd have to, like, again, sustainable revenue model is our magic word, right? So you can get people to participate, maybe have bonds in, like I did for a community-oriented restaurant, but that's the risk factor is a lot different than for on real estate, right? So then you need to maybe give, instead of 2 or 3 or 4%, maybe you need to give them a higher percent return on it, right? And so because the risk is higher, the return is going to be a little bit better too, but then you need to have a really solid business model to be able to pay for that, right? Getting money is always great, but you have to make sure you have to give it back, unless it's, you know, unless it's a donation. And I know that, you know, for some people who are charitable organizations, then you know, that charitable status will afford you the thing to have donations be made, but that's a tougher sell sometimes too, to find individuals or even an individual with a larger amount of money to, you know, give you money in a charitable way, like make that donation. If you don't have charitable status, then it's an even harder sell, because now they're just giving you money without any kind of tax receipt that can be issued in return. So for us, this was just a really solid way to interact. We had people that started out too, that made a lot of people who just, you know, they had this money, and they're community minded people, and they wanted to be able to channel it. You know, that we could also get, like, you know, you could move it from your RSP into this bond program, and it still would be something that you can drive yourself, and it happens in your neighborhood.
I am thinking about the real estate market right now, how, you know, how expensive it is to buy a building, a house, like a property right now. And in terms of like being a new entrepreneur, maybe like having already some reputation in your enterprise, the expectation of like building a property, like, I mean, buying a property might be a bit out of, reach for many. So in terms like, strategies to get into that position in which you can get the money for building the community bond, are there any strategies you can share with us?
For getting
the whole the partners, like all the pieces that you need to make your community bond and starting it. I don't know, like I'm thinking that how challenging can it be for somebody who's like new at this, and then it's just starting also, but it's like, it's a great idea. It has a selling pitch and people are buying into it. So what would be something that, like, strategies that you can share with us in terms of, moving the idea forward and getting more people involved into it too, so you can make it a reality?
Well, it always starts with a vision or a dream. Those can be the same thing sometimes. I have an organization that we work with in Barrie as well, and they've done a similar thing. They ended up with I think it was a 40 or 50,000 square foot warehouse, and they subdivided all of it and gave it to different community organizations, and they have a bit of a rent sharing there as well, right? Everybody benefits from the large space and having each other working in the space. They all pay a little bit more for their smaller space, but still less than having their own space, right? And so there's a business case for the, because right now, if there's whatever 12 of us on this call, if we're all nonprofits, we all have our own place, we all have our own photocopier, we all have our own, we all have overhead that we all need, but doesn't, like, we all need a bathroom, which everybody pays for, but it's not like you can set your office up in there, right? We all have maybe a little kitchenette. There's all of these different things that get replicated, and we can put 12 organizations under the same roof. Then all of a sudden, all of those things get minimized, and we can kind of capitalize on the sharing part of our relationship, right? It starts with somebody with a vision, starts with the dream, and then you need to just soldier away at it. You have to find the right space that works for you. In case of the building, then you need to get the people on site. When this was literally a construction site, we would have groups of somewhere between 10 and 20, sometimes 25 people that were interested in the community bond, and we would literally walk them through this place when it was nothing but rubble and dust, and point at where things were going to be, and ask them, to loan us their imagination for a while, and it worked.
What if somebody already has a building? And the building is already, like, it has an owner, like, can an organization who already owns a property can take something from it?
Absolutely. So in that case, if they own it outright, or they want to put an addition on, or a renovation on, or maybe expand and leverage to another building, right? Some like we have one Canadian Mental Health Association is building another building in our town because they've outgrown those. So maybe you've outgrown yours, and that's your strategy to purchase another building or build an addition on, or whatever the case may be, right? And it's a great way to do it. Less people are want to know where the money coming from, and so some people, big banks aren't great, but credit unions are sometimes difficult for not-for-profits to deal with as well. Van City has been very good to us. So in terms of leveraging what you have and getting to the next level of your organization, it'd be a great option to think about for sure. Yeah.
And what is the role of the for-profit businesses of the community in this kind of community? Like, what are they? What are they in all of this? Are there any participation for-profit business entrepreneurs that are doing their businesses? Like, is it anything here for them? In terms of topic?
We actually, a lot of our bondholders are people who they themselves have for-profit businesses. Our local Business Improvement Association is a bondholder. The city of Guelph itself participated in the program, and which is great because there's no conflict of interest there, right? It's just in case of the Business Improvement Association, they had a small surplus. They were able to put it into this organization and participate in the program without any any issues at all. And so there's maybe 1 degree of separation there, Marisol, but we can still, there were people who are known business people, private business people who participated in this program. They wanted to contribute, but it's also a sound business case for them.
And well, sorry, again, I want to invite who are here, well, all participants here. We have 12 participants in the table right now. If anybody has a question or a comment or want to jump in, please feel free to just interrupt us and let us know. Another question that I have about this is, what is the impact in the community from a community bond? Like, how is this beneficial for the communities that are not maybe like included in the whole, equation of making a community bond, but like extended community there?
Yep.
What will be the benefits from that community to have a community bond in their community or something going on related to that?
Well, again, now I know where my investment money goes, right? It's not just that I'm taking my money and giving it to a financial advisor who puts it in a fund, and I don't even know who is participating in the fund, right? We had, I am also an associate at a Encompass, and we're Encompass Co-op. We're working in the homelessness space, and we had one foundation. There's 10,000 foundations in Canada. They have about $86 billion under management. We had one of them. They can give away about 3.5% of it, and the other 96.5% they have to invest in order to make the money to give away. And the one foundation, they were dealing with diabetes on First Nation reserves because diabetes is prevalent. And we said, what about the 96.5%? And they said, well, our fund manager looks after that. It's like, where are they invested? And they're like, oh, we have no idea. So we asked them to go check, and they were invested in KFC and McDonald's and Cisco Foods. So the money they were investing is actually causing the diabetes on the First Nations. Right. So we don't really know. Whereas this, people know, they 100% know. And the non-financial benefit is that there's this building now here, that people can access, that people can use, they can interact with it, they can meet people in, they can develop relationships with. We have different organizations now where when they work together, the whole becomes bigger than the sum of its parts. Right. So there's that, which is, for me, is the important part of the investment, right? The part where we all get together and our collective efforts are way more effective than if I was just working on my own, and then as an investor, I get to also sit back and watch the fact that, Audley and I and Tristan, Logan can get together and have this out of the park idea and solve maybe a problem of our community that never would have been realized had we not had a place to gather in the first place.
Wow, the sense of belonging and the social capacity that is capable to bring into the table with these strategies is really cool.
Yeah. It's, well, especially, I think in the last 2 years, we can all have some sort of appreciation about the effect of being able to interact with each other physically, for sure. Tristan, you had your hand up there, I noticed for a second.
I didn't see the hand. Sorry, Tristan.
That's okay. It was a good question. No, I had a question for you, Mark. So you've been talking a lot about real estate and tangible things, brick and mortar. Let's say there's a non-for-profit that wants to use this community bond style to bring value to their clients and their potential customers, but they don't have a brick and mortar. They don't have like a gym or an office that someone can come into. How do they provide value through this or using this?
Well, how do you provide value to the bond?
Yeah, for both, for the
Right.
client side and as the bond side.
Right. So basically, whatever your model is, we've been talking about real estate a lot, but if you had a social enterprise that was generating money, like, because you could still have a social enterprise that's a not-for-profit, and your business case was good, then in order to set it up in the first place, you could raise community bonds. It'd be a lot riskier for the bondholder, right? So say I wanted to build a restaurant that focused on at-risk youth or people with some barrier to employment, right? That was our whole model was, so we need a couple $100,000 to build this restaurant so that we can get new Canadians or people with disabilities, people just coming out of the prison system to get together and work under the roof and work on some skills. So I need $200,000. The restaurant itself is going to generate some revenue in its operation, right? But the restaurants are risky. So then the sustainable revenue model that people will look for the bond might be a little riskier for them, right? So then we have to come up with a business model that maybe gives them a higher rate of return to justify the risk. So maybe I need to look at a 10 or 12% return instead of a 3 or 4% return. Right. The real estate is easy because it's bricks and mortar and it's an asset, right?
Yeah.
If you're going to a business, which is different, then we're going to have to work on a different business plan. And even for the community bonds we have, didn't work for everybody. We had toured a lot of people through this building, and not every one of them signed up. A lot of them did, but a lot of them didn't. Right. So if you had a model, say to keep with the restaurant example, then a lot more people be like, yeah, maybe not. So it would be a lot more work to get the $200,000 in bonds out there for people to subscribe to, so that you can get your venture underway.
Right. Okay. So the basis of it is just that the risk to reward factor needs to be there for the client incentive.
Yeah. Absolutely.
Okay.
Absolutely. So I think it might be a bit, if you were if you were an existing organization that you were already had some momentum going, and you wanted to expand or do something else with, like, you had a bit of a reputation, I think it might be a bit more challenging for like a brand new organization to say hi and nobody knows who we are, but we've got this great idea and can you give us all your money? Might be a harder thing to spin or have to leave people confident about, so they can trust you with their funds.
Right.
Yeah.
No, that makes sense. So
Yeah.
it's not as much as a startup as it is something to use to grow in terms of businesses.
Yes. Yeah, absolutely. Or not-for-profits. Absolutely.
Okay. Good to know.
Yeah.
Well, we're almost, but it's almost 6. So I wanted to ask you, Mark, for in terms of people who want to get better at knowing what community bonds are, how do they work, maybe promoting the whole idea of a community bond, who do they go to? Like, where do you learn about this?
We learned by doing, for sure. CSI in Toronto, they really, in terms of like Canadian organizations who led the way, they've done a great job. And then Julia Grady, who's our executive director, who would be happy to talk to anybody if they were interested in kind of pursuing this further. And she can be reached through the 10C 10 Carden website that I posted earlier. Would be happy to talk to them as well. It's good to learn by doing, but it's also good to learn by not repeating somebody else's mistakes. And we can certainly look at the pitfalls. That white paper I sent around is some good background reading. Again, it's from the BC perspective, but a lot of its content is valid for the whole country. So it's a good education piece to read through that and get it. But yeah, like literally, you could just give us a call and we'd be happy to talk to people about it. I think it's poised to be a very powerful tool for not-for-profits in this country. And the more organizations we can get to do it, the easier it's going to become, the more it's going to be accepted in the investment world too, in terms of our respective communities. And the larger impact it's going to be. I think the more that we can control our own money, which is what we're trying to do with the Encompass Co-op, the consulting company that I work with, is we're trying to get not-for-profits to be in charge of their own funds. Instead of looking at a funding model for their sustainability, if we can have a model that would allow them to kind of have their own revenue, then they can be in charge of their own destiny a lot better than they are currently.
Thank you so much, Mark. Any final questions or comments from the audience here? We're right now open to hear. even in the chat, or maybe Mark, if you can post your email too in the
sure.
chat, so if people have further questions. And after you do that, maybe any final thoughts you would like to share with us about this topic. Thank you, Mark.
No problem. Yeah, if there isn't any, I would like to say thanks for the opportunity to talk about it. It's great. I coach social ventures at Sheridan College as well, and we have some of our entrepreneurial participants, I think, are looking at this kind of model in terms of how they grow and how they move their organization along, which is super exciting. But I just ask a lot of questions. There's all kinds of possibility out there if we just change the paradigm that we've been in for a long time and realize that there are different ways to do things, and there are people around to help us do those things, which is also great. So, and we're going to do it together, and that's the other most important thing, is that the more we can have a collective response to progress and making sure that all of the people in our respective communities are cared for, then the better off we're all going to be.
And those are the kind of values of the people at Edge that I love. And I love
me too. So great. So great.
Well, thank you again, everybody, for being here with us and sharing with us your thoughts, your questions. Tristan, thank you for opening your camera.
Yes, nice to see your face, sir.
Yeah, a new face. And Christine, thank you so much for your questions too. And everybody who's here, thank you again for attending. And Mark, I am looking forward to talk to you soon too.
As always, Marisol, thank you so much.
I'm going to stop the recording.